Overdraft fees. You have $50 in your account. You buy coffee for $5, gas for $30, and groceries for $20. Your bank processes the biggest charge first. Now, your $20 grocery bill causes an overdraft. Then, your $5 coffee hits. Another overdraft fee. You thought you'd pay one $35 fee, but now you owe $70 in fees alone. Banks reorder your transactions on purpose. They process larger amounts first to maximize the number of overdrafts. This trick earned banks over $8 billion in 2022. They claim it's to pay your important bills first, but it's really to drain your wallet faster. Minimum balance requirements. Your bank says keep $1,500 in your checking account or pay a $12 monthly fee. Sounds simple, right? But here's the catch. That $1,500 just sits there doing nothing for you. The bank takes your money and lends it to others at 7% interest on car loans or 20% on credit cards. You get zero. If 10 million customers keep $1,500 each, that's $15 billion the bank uses for free. They make hundreds of millions in profit from money that's technically yours. And if you dip below that balance even for one day, they hit you with that fee immediately. ATM fees. You need $40 cash. The ATM isn't from your bank. You pay a $3 fee to the ATM owner. Then your bank charges you another $2.50 for using an out-of-network machine. That's $5.50 for accessing your own money. Americans paid $4.6 billion in ATM fees in 2023 alone. Banks have deals with ATM networks. They could waive these fees, but they don't. Some banks even charge you for using their own ATMs too many times per month. It costs banks almost nothing to process an ATM transaction, maybe 30 cents, but they charge you 10 times that amount. Credit card interest rates. Your credit card has a 24% APR. You owe $5,000 and pay $150 monthly. It'll take you 4 years to pay off. You'll pay $2,000 extra just in interest. Banks make it worse with compound interest. They charge interest on your interest. Miss one payment? Your rate jumps to 29.99%. Banks also use daily compounding instead of monthly. This means your balance grows faster. The average American household with credit card debt owes $7,000. Banks collect over $120 billion per year from credit card interest alone. They want you to pay the minimum because it maximizes their profit. Deceptive savings account interest. Your savings account pays 0.01% interest. You deposit $10,000. After 1 year, you earn $1. Meanwhile, inflation runs at 3%. Your money actually lost $300 in purchasing power. The bank takes your $10,000 and lends it out at 7% for mortgages or personal loans. They make $700 from your money. You get $1. They pocket $699. Some online banks pay 4% or more, but traditional banks refuse to compete. They count on you being too lazy to switch. Over 180 million Americans keep money in low-interest accounts. Banks profit billions from this spread between what they pay you and what they charge borrowers. Selling your data. You agreed to their privacy policy without reading it. Now the bank knows everything. Your income, spending habits, where you shop, what you buy, when you travel. They package this data and sell it to marketers, insurance companies, and other businesses. Your transaction history is worth money. Banks make hundreds of millions selling customer data. They claim it's anonymized, but companies can still target you. Ever noticed ads for things you just bought? That's your bank's data at work. Some banks sell your information to credit card companies who then spam you with offers. Others sell to data brokers who create detailed profiles about you. You get nothing from this. The bank gets paid.